Facebook went public, people are upset because somehow Mark Zuckerberg drank everybody's milkshake. They're going to be investigating exactly how he was able to get straw that long to drink everyone's milkshake before the closing bell on day one. Evidently, IPOs didn't make it into Susie Orman's 2009 action plan. This is going to be pretty much out of left field. I'm going to talk about finance. I know nothing about it, so let's just put that out there. I have enough trouble figuring out whether I should buy books from Amazon or eBay, whether it's a better deal to buy coffee from Publix or from Winn-Dixie for 40 cents less. Or should I buy my gas here at Shell and get the points towards free coffee, or should I drive over the bridge and get the gas for 3 cents less? Which one balance out? Which one is a better deal for me? That's the extent of my finance. Why am I interested in finance now? It's of course about this whole brouhaha with Facebook going public and the IPOs and the values and things are horrible and whatever. The IPO, which I didn't even know what that is. IPO. Where do we go when we don't know? Go to Wikipedia. It's an initial public offering. Okay, makes sense there. Pretty much when a company goes public is the first time that that company is launched on the stock market and the shares go for sale. What's going on with Facebook is there's a lot of anticipation. A lot of people, I've talked to people at work who were thinking of buying shares and everything. People were calling their brokers and stuff like that. There is a lot of anticipation for this stock. Last month Zuckerberg was saying it's going to be worth like $108 billion, or the company's worth $108 billion. There was rumors about that. And what happens usually with the IPO, the company putting their shares on the market will go to an outside investment banking firm who will come in and evaluate the company as an asset and determine what the price of the share should be based on a whole bunch of different factors. Ad revenue, possible ad revenue, expansion, things like that. The drama about Facebook is that the stock was valued at $45 a share. $38 a share. I think it was like $38 a share, $45. Maybe some people were allowed to get it at $45 a share early, whatever. But $38 a share, stock market opens, all kinds of glitches in the stock market all day long. $38 a share. The highest was $45, but $38 a share. They said the company is potentially worth $104 billion, so we should therefore value these stocks at $38 a share. You do the math, and boom, threw it out on the market, right? Ever since it hit the market May 18th, you know what happened to Facebook shares? Getting down as low as under $27 a share, which you might be like, it's $10, sure, good, can recover that, whatever. You're talking about people who are buying thousands and tens of thousands and I don't know, 100,000s? They're buying gazillions of shares of these things, and it's a lot of money. It stacks up. Companies under investigation, the underwriters are under investigation, Zuckerberg's being sued. Stop it, Leo. Leo's under investigation. It's important to understand that a company goes public as a means to raise large sums of money quickly. As you know, like Facebook bought Instagram, so Facebook is making all these acquisitions, and I'm sure they have a plan. They decided this was the time to go public. The company, of course, because they're selling the shares, they want the company to be valued as high as possible. That first initial public offering, all the profits go to the founding members of the company, which you saw Social Network. You pretty much know the people involved, Justin Timberlake and Spider-Man and whoever else. Not the twins, even though they were gorgeous in the movie. So they want it to be valued as high as possible so that they can take out as much money as possible. Anytime after that, when it's on the stock market and it's being sold at a profit or something, the shares go up and things like that, that has to now be dispensed amongst all the shareholders. So that initial public offering, you want to jack that price up as much as possible, unlike what Google did, so that you can get as much money as possible. That worked out great for Zuckerberg because, like I said, it was very anticipated. Everybody was buying it. Almost immediately after the stocks went public, there was a report that the underwriters came back and valued the company lower than the initial $104 billion that we were hearing about. Then there was reports that there were glitches, that people were trying to sell their shares, but for some reason they weren't able to unload the shares. So they saw, oh my gosh, this might drop, or this might not be good. We need to get rid of this as soon as possible. But then whatever stock people used to trade didn't work. So there was reports of the underwriters artificially keeping the value up at 38 for day one. Of course, after day one, that's when it started going. So the underwriters in question, of course, are Morgan Stanley, JP Morgan, and Goldman Sachs. Damn you, Wall Street! All those names are familiar. I don't trust not a one. I saw Social Networks. I don't trust Zuckerberg either. With all the trading glitches, the botched orders, the underwriting report that was maybe dispensed to the companies for the underwriters, but not told to the general public until later, so that all the underwriters knew to dump the stock, and then all the glitches that didn't allow regular people to dump the stock when they determined that it was probably not a good deal. The fact that Zuckerberg unloaded a lot of stock himself, it just seems like, you know, the general public is left holding the bag once again. It'll be interesting to find out what they determine caused all this freaking, for lack of a better word, but fuckery. It'll be interesting to find out why everything got so jacked up to begin with. Why all the confusion? Like, don't you guys do this every day? Didn't you guys know this was coming? Didn't you guys know this was coming? So that's pretty much my little finance video that you'll probably never see another one unless I'm saying, I'm rich, bitch! That's my understanding of the Facebook IPO situation as I know it. If I'm wrong on anything, just let me know. I won't take it personally because I don't know anything about finance. Of course, again, if you found this entertaining or you found this valuable or whatever, subscribe. We'll be putting new videos up regularly. If you found this entertaining, like it. Oh, and I write crap too, so check out bipolaropposites.com. You see my mouth moving, but how about my pen? If you're just curious about what else I'm thinking, go to bipolaropposite.com.